please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Our technical experts will be joining us in just a bit, but I just want to point out that today it's quite possible that there is a gap up opening. Let's pull up the Asian stocks for you yet again. It's a 1.25% gain on the Nikkei, but more importantly, Hang Seng, which perhaps is more akin to our markets, 1.5% gain both on Shanghai and on Hang Seng. So a lot going for the equity markets, and the main reason is the way in which dollar has sagged. That move below 94 is particularly impressive for the emerging markets. That's the dollar index coming up for you. Its move towards 95 had sparked some fears, and that happened along with the trade conversations, the trade tic-tac wars. But now it does look like with the subsiding of the dollar, we have something good going, though we may have, of course, local issues to tackle.
Yes, it's actually Greater China markets, right, that are getting a big boost this morning, whether it's Hong Kong, Shanghai, all those markets doing pretty well. So we'll keep an eye out on that. For our own markets, of course, 10,800 has been a huge resistance or a hurdle on the upside. We couldn't sort of get past that even on Friday, but let's see how things go. Let's talk about the commodity markets. Manisha Gupta joins us for a quick roundup of all the action that's taking place over there. Hi, Manisha. Good morning.
Hi, thank you so much for that. Well, we have seen the global markets actually continue to watch out for any repercussions of the global trade war that we saw begin in the previous week itself. As of now, of course, the market had been working, in expectation of that, and finally that has happened. We have seen some bargain buying happen in many of these commodities, starting with the crude oil prices, and after nearly 0.5% of decline in US crude, 5.5% of decline in the Brent crude prices, there is some buying that we can see in Asia. Ditto is the case for the base metal prices. Very sharp declines is what we've seen in previous week. Copper was down 5%, zinc was down 6%. And actually, if you look at the last 1 month itself, most of these metals have declined anywhere between 9 to 15%. So some buying is what you are seeing for many of these as well, especially for zinc prices, where we did see prices decline all the way to 11-month lows. There is buying, as reports suggest, that the Chinese output is lowest in 2015 when you look at 2018 in case of zinc. That seems to be getting some buyers back into that space. The only area that hasn't seen much of buying today has been the ferrous metal space. Iron ore and the steel prices have continued to decline today as well. So today actually is the 5th straight day that we have seen a negative opening coming in for these couple of metals.
Okay, but Manisha, do stay on. The reason why we have invited you in a hurry, a good half an hour before your normal appearance on the channel, is because of this news that's been reported in many of the papers that there is rain deficiency in rice-growing areas like West Bengal, Odisha and Chhattisgarh. And this has been quite high. It could have an adverse impact on the sowing area of paddy. In fact, one of the papers says even cotton could get affected. Any details that you can fill us in on?
Well, yes, there are a couple of reasons, Lata, that we have seen most of these commodity prices continue to gain up. One, of course, has been the hike in MSP. And second, of course, has been the sowing numbers. Remember, the month of June ended with a deficiency of nearly 5%. And it was, the major number or the major contribution on higher rains came in from the coastal area. So while the southern states and the western coast got more rains, it really has been about central India and northeast areas, which did see lesser rains. And the sowing numbers have been quite dismal. Actually, when you look at a couple of weeks back, we were down by almost 20 to 40% in sense of sowing for many of these crops. It actually has seen a bit of a gain come in, but even now when you look at paddy, we are 14% down in sense of sowing as compared to last year. Cotton number is down by 21% as compared to last year. So there is a bit of a concern, and the important thing is that you have only until mid of July as a window to continue to sow, because after that it really is about the rains. That period really passes off. So while we did see 12th June to 26th June as a period when there was a pause in the monsoon and the sowing actually got delayed, that seems to have really marred those numbers, and that could be a bit of a concern. But most people still tell us that give it another week and we might see those numbers improve. But for paddy, that's not the only concern. The MSP hike has been by 13%. WTO allows 10%. So paddy in that sense really is marred with a lot of news stories and apprehensions around it.
Okay, and Manisha, thanks for that. But the government doesn't seem to be too concerned. I mean, in news reports, they have reiterated that last year's record food grain output was 280 million tons, and that would definitely be surpassed this year. The shortfall in the acreage will be made up in the coming weeks. But from a market standpoint, how do you read into this?
Well, the first thing that the market must take home, and which it might, a spin it might put today, is that agri-economy is not rural economy. Yeah. And increasingly, the agri-economy is becoming a smaller and smaller part of the rural economy. I mean, in the GDP, the entry is agriculture and allied. Now, that allied is becoming more and more poultry. It's primarily because of, Pradhan Mantri Gram Sadak Yojana, because of tele-density, the mobile. More and more people are getting into other businesses like poultry, animal husbandry, sericulture, things, say, making of honey, which can be easily transported. Some time back, that would have been a problem with more rural roads. That expansion of a non-agri, rural economy is growing. And just for your information, you have industry in GDP. 50% of that comes from rural areas. Okay. I mean, it's not a small... so there is a large hinterland which also participates in industry. While it is a personal... It's distress for the farmers who are involved in both paddy and cotton. And that's a worry. We must not confuse it with overall rural prosperity. It's not as if tractor sales will fall or, the way we look at MMFSL should alter immediately. Yeah. I'm just saying that those are two different things. Yeah. There is there are loan waivers for farmers because there is an agri problem, but that's not a rural problem. And the market, I think, will be wise enough to know that distinction.
All right. Well, let's drill it down to the specifics of the market, shall we? Because the Asian markets at the moment are roaring. Big moves coming in the Hong Kong index. Ashwani Gujral and Mitesh Thakkar join in. Gentlemen, morning. Ashwani, last week was a bit tough. I mean, the market just refused to get above the 10,800 mark. What's the positioning this week, considering we're heading into earnings season as well?
Well, good morning. And Friday, we took home long positions, but today is the perfect trap. You are almost at 10,850, 870. We'll probably get there, and from there, that is the top end of the range. Everything's looking good. Global markets XYZ, and that would be a time when bears could come in again and again take the market lower. The macro trigger that is needed to move out to new highs is still not available. We don't trade a whole lot. We are not exporting, etc. So I don't think this trade tariffs bit impacts us beyond a couple of hours. But we are at the top end of the range. And for me, the big trade is the moment, the cat is set among the pigeons and the market moves lower. Today is a perfect time when retail, etc., if they tend to buy in the morning, they could be in trouble by the afternoon, because again, follow through is very important, and it may or may not come in. 10,850 you can't buy with a good risk reward.
Okay, so today morning you're selling at higher levels, 840 thereabouts, and you're buying at lower levels, say about 100 points lower, right?
See, this is a mean reverting market. If the mean is 10,770, you gap down 50, 60 points, you buy and you make money. If you gap up 60, 70 points, you sell and you make money. But obviously, you have to wait for the market to turn. But my sense is that today is a good trap day on the upside.
Okay, a good trap day on the upside. Mitesh Thakkar is also with us. Mitesh, morning. Do you also get a sense that, this is sort of not the real thing on the upside today if it plays out, and would you sell into it?
Good morning. I think the initial feeling is that we will be opening around the supply zone of 10,830, 850. So the initial feeling will be to take profits on the long position and then check it out for about 15 to about 25 minutes. See if we are showing strength or follow through to get past 10,850. If we do that, maybe another 70, 80 points could happen on the upside, and we could retest the Karnataka elections day high of 10,925, 930. But broadly, yes, I think I'll be slightly more inclined to take profits and wait for some kind of dip in the afternoon to buy aggressively again.
All right. Well, we should be joined by Sudarshan in just a bit. But we didn't ask all about your Nifty Bank trades. Ashwini, what will be the... Is it also, you know, buy above a level and... buy below a level and sell above a level? Or is there a different strategy for that one?
The best selling level for Bank Nifty is probably, 10,700 thereabouts, because it's going to be a 60-70 point up move. You could easily have the banks go up 150, 170 points. Now that gives you a very nice selling point. And, if you sell from there, your stops are close by, because the high of the Bank Nifty is hardly, I think, 26,850, 900. So that way, if it starts to work out, there's a move all the way down to 26,200, and on the Nifty there's a move all the way down to 10,550. So that way, this morning the risk reward for the a person who's going to hold positions or who's going to buy intraday is on the other side. So that people have to remember that there is no reason for us to go up, break out and make new highs, because if you start crossing 10,900, 950, that is what the assumption is. So you have to be very careful. At 10,550, don't get too bearish. At 10,850, 900, don't get too bullish.
Okay, Sudarshan Sukhani is also with us. Sudarshan, are you getting bullish at this 10,800 mark, or do you think that it could prove to be a hurdle for the market today yet again?
Well, I'm upbeat on the markets. The US markets are supportive. World markets are okay. And this is again, we are on the verge of a breakout from 10,850. And it's not only that. This breakout will be a surprise to most traders, and markets like to surprise. We are all expecting we will be in a range, we will go down, and well, this would be interesting and a surprise, and I'm willing to take long positions. You can divide these long positions in two parts. Take some positions when the market opens, and the second part could be if the market has a dip. But in any case, I would be long in the Nifty, and I would be certainly long in the Nifty Bank. You have a stop of 10,300, that's a tight stop. I'm 26,300, that's a tight stop. With that, the Bank Nifty is in a very narrow range and may be willing to go higher. We must also keep in context that we are in the results season. Results could surprise us positively. So all in all, I'm upbeat and buying.
Okay. Yeah, some bank results, but a majority of them could still show pain. But let's see how things go from here on. There is definitely a spring in the step at the moment. Ashwini, which other stocks would you trade?
See, paint stocks have started to show a move up. So Berger Paints is a buy with a stop of 292, target of 306. Hindustan Petroleum, while crude etc. is higher, but these guys have been smashed up way too much. So now there is opportunity in stocks which have kind of become extreme oversold, and now where 10 to 15% style rallies could happen. So in Petro is one of them. So that's a buy with a stop of 264, target of 278. Sun TV has been bashed up quite a bit. So out there you can buy with a stop of 788, target of 810. Century Textile is a buy with a stop of 900, target of 945. And Ashok Leyland is a buy with a stop of 125, target of 140.
Okay, Ashok Leyland has made a comeback of sorts lately, but Berger Paints seems to be the top favorite today. Mitesh, you have it on your list as well. Take us through that, and what are the other stocks you're looking at?
Yep, that's right. In fact, I like both the painting names, but Asian Paints is just kind of hovering around the earlier highs. So Berger Paints, from a trading point of view, might enjoy more momentum for next 1-2 sessions. It's a buy with a stop at 290.5 and look for targets of 308. I also have a buy on ITC with a stop at 268.5. Would look at targets of around 283 here, and a conditional buy on M&M, which I suspect might be triggered in the early morning trade given the fact that we will open gap up. It's a buy above 928, keep a stop at 914, look for targets of 955, and also one sell call, that's on Chennai Petroleum. That's a sell with a stop at 296.25 for targets of 28.
Okay, fair enough. Sudarshan, what's your list of buys and sells? More buys?
More buys. M&M is a buying opportunity, almost again coming to lifetime new highs. Stay invested in blue chips. Marico is a buy. FMCG stocks have been doing very well, and that performance should continue. They are out outclassing the whole market. So Marico is a buying opportunity. Both M&M and Marico can also be taken as positional trades apart from the intraday trade that we discussed. And the third is TCS. I think IT stocks are again willing to move higher. Not only mid-cap IT but also large-cap IT. The Nasdaq had a 100-point rally on Friday, I think, and that should probably see some follow-through here. Two short sells, they are only intraday. Canara Bank, I'm downbeat on PSU banks, and see, they hardly rallied when the market went up 300 points. And Cholamandalam Finance, again downbeat on NBFCs.
I remember Asian Paints used to be one of your favorite stocks back in the day, Sudarshan. I mean, that stock is back on the radar. You know, it's hit a new high. You wouldn't trade any of the paint stocks today?
No, it's just a matter of choosing the blue chips, that's all.
Okay.
Asian Paints is an excellent investment idea.
Fair enough, gentlemen. I'm sure we're going to have lots more questions for you. But for the moment, let's also get some F&O cues going before we come back to you with more questions. Vinod Sharma of HDFC Securities is with us. Good morning, Vinod. Always a pleasure having you with us. It's a huge rally out there in the Asian markets. Does that take us above the 10,850? Our technical experts believe the resistance could continue.
Yeah. Thank you, Lata, and a very good morning. My sense is that all the risks in the market are front-loaded. So the markets are going to climb, all of them, including the 850 level. It may not climb today, but during the course of the week, we'll see. And ultimately, I'll go a step forward and say that 10,893, the ultimate resistance now, I think definitely will make way for the Nifty, for the bulls. So currently, looking at the mid-caps, the way that they've gone up, I think a trend is seen in which the public confidence is coming back, and therefore we believe that it is a time to go long in the market and not short. These resistance will soon be in the rear view mirror.
Okay, so from the Nifty companies, a couple of stocks that you're looking at today, Tata Motors, ITC. Take us through the strategies there.
ITC is the strongest of them. See, if you look at the last 3 years, you don't find ITC has even done anything. So all the gains that are there are in the series of 5% have only come on after it has moved in the last week. So our sense is with the good monsoons and with the Tatas rejigging their portfolio, and so as a concentration has again come back to the FMCG, and now with the domestic plays, so rural plays, where I think ITC will definitely do better. So I'm looking at ITC not only from a positional perspective, but even for a very long term also. ITC, which has not done anything in the last 3 years, will now definitely deliver. I'm buying the 275 call at 4.5, stop loss at 2, and target of 8. That is in the current series. Among the other ones, I have Tata Motors, which obviously did well on Friday. Although the stock OI was reduced to the extent of 1%, I'm buying the 280 call there at 6, stop loss at 4, and target of around 7, a target of around 10.
Okay. Well, you have BEL and Glenmark among the mid caps.
Yeah. Bharat Electronics, although I don't usually follow it up with a stock which has moved up 8% on Friday, but definitely if you don't buy it now, maybe you could buy it slightly lower, or you could outrightly buy at the current level, primarily because of the fact that we see this as a trend change, something which has dogged the market, the mid caps. I think it's now time the public attention is coming back. So I'm buying the 112.50 call at 3.6, stop loss at 2, target around 7 here. And Glenmark Pharma, which hasn't done anything else, just moved up 1% in the series and 1% OI added. It is still below the levels at which it will go back into the eyes of the trend watchers. So I think that trend could be soon coming because of the API interest which is shown by the various PE funds in the company. So I'm buying the Glenmark 590 call at 16, stop loss at 12, and target of around 25.
Okay, and finally Ashok Leyland as well, right? I mean, that one made a comeback on Friday, but do you expect more upsides there?
I think going by the derivative scene that we have seen the built up, I think there is some upside still left here. Although the headwinds arose because when you gave a sell call, when the company got the fact that multiple axles, they were allowed to carry more weight, which meant lower demand for commercial vehicles. But I think the market has gone through that profit booking mode, and there is some more to be had in the stock. I'm buying the 135 call at 3.25, stop loss at 1.5 and target around 6.
Okay. Well, before we wind up this technical segment, thank you very much, Vinod Sharma, for joining us with your strategies. Ashwini, I wanted to ask you about the Shriram twins, Shriram Transport and Shriram City Union. Last week was a rough week for them, with the annual reports revealing their corporate guarantees to their subsidiary. Is there anything in either of these stocks that you can play?
See, the fall on Shriram Transport has not ended. Now, these are the sort of times when, long-term investors tend to come in, but let that process start. I think we can easily make a base at about 920, 940 on Shriram. So still a couple of 100 points to go. On Friday, it did not show any signs of turning around. And similar should be the case for the other twin also, because this sort of news flow, immediate buying often is not visible. So here probably a base may be formed, say closer to 1750 to about 1850. There shouldn't be any hurry to buy. They need to go flat before you start buying.
All right, gentlemen. We have to take a break. I just wanted to remind you all that this story, Mr. Tyagarajan's quote in the Business Standard, that they are looking to merge Shriram City Union and Shriram Transport and probably list the holding company, Shriram Capital, was something Nisha had reported a week ago in detail. Therefore, this looks like it's very much in the air, and I think the markets will be a little wary about that. So what happens? What are the merger ratios? These kinds of uncertainties always keep the market a little twitter. So therefore, there are also fundamental reasons why it could.
Sterlite Technologies is one stock in focus. It has announced the acquisition of Metallurgica, an Italy-based manufacturer of special precision optical fiber cables and specialized copper cables. Now, they've made that acquisition for 47 million euros. What will this do to their overall book? Anand Agarwal, the CEO of Sterlite Technologies, joins us now to talk about that. Anand, good morning. Congratulations on this acquisition. Just tell us what kind of benefits this would bring to you, and also, more importantly, would you revise your $100 million profit guidance for FY20 higher with this acquisition coming through?
Yeah, good morning, Lata. This acquisition essentially is in lines of our increasing global presence. Now, over the last year, our revenues globally had become almost 54%, with Europe taking a big share of that. So we are just establishing our manufacturing presence in Europe also through this acquisition. And it adds to our portfolio. So we now have manufacturing presence in India, China, Latin America, and Europe, and creates the full portfolio for us in terms of products as well. In terms of guidance, I think we are more comfortable now with 100 million plus getting achieved a bit earlier, but we're not looking at revising the numbers right now.
Okay. Well, I'm coming to the guidance in a second, but see, this Metallurgica, we understand FY17 financials, sales itself was 48.7 million, and you're paying 47 million. So should we understand that you're taking on some debt?
There would be some debt, some euro debt that we'll be taking on locally. So it will be financed almost about 20% by accruals and about 80% by debt, which will be low-cost euro debt.
It's EBITDA. I mean, you all have revealed the revenue. Would it be margin dilutive or anything?
No, it will be EPS accretive from day one, and margins are about 15-16%, which is representative of the cable business.
Okay. Now, the other question I wanted to ask you, you said that you may achieve your 100 million target earlier. Now, should we understand that this Reliance fiber to home effort makes you a beneficiary by any means? Would you be supplying anything at all to them?
Definitely, we have been supplying to Reliance for the last several years as they built their overall optical fiber network, which was essentially connecting all their towers to provide 4G. So now that is getting more horizontal access, is moving to homes and enterprises. Definitely will be providing them, continuing to get a good share of what they use, both in fibers as well as cables.
Some numbers, Anand. What percentage of your revenues comes from Jio currently, and since this announcement has come through, how much do you think it could grow?
Currently, it's about 9 or 10% of our revenues. We think it will be in that sort of range only because the rest of the world is also growing for us pretty rapidly. So we think it will be in that range only.
Okay. How much did you say is the percentage?
Closer to 10%, between 9 and 10%.
You don't see it increasing? I mean, if their footprint is aggressive, wouldn't this increase?
It would. I mean, we don't actually, we have not looked at numbers from that perspective, but it won't be, say, higher than 13, 14%. Okay. It would be in that range. Yeah.
Okay. And what will your total capacity be once the expansion comes through? And what kind of capacity utilization are you looking at now that you have this acquisition as well?
So on the fiber side, we are expanding from 30 to 50, which comes in 2 phases in December this year and June 19. So that's 50 million. We are currently running at 100%, and we have orders booked through a large part of next year as well. For the cable, which is this acquisition, so we have 15 million. This adds up another 20%, so it takes us to about 18 million kilometers. And on the cable side also, we're running pretty close to full capacity right now.
Okay. Anand, it's always a pleasure having you with us. Thank you very much for giving us more color on this Metallurgica Bresinia acquisition, as well as, of course, the orders coming in from RelGeo. Well, with that, let's invite our first big market guest for the morning. Vikas Khemani, President and CEO of Edelweiss Securities, has been kind enough to drop in our studios. Thank you very much, Vikas, for joining us.
Pleasure being
well,
here.
first, let me remove some doubts that investors may have because of the mutual fund flows being slightly tepid in June compared to May. Should that be a bother?
See, I think any time the mutual fund flow has been a very big source of liquidity for the markets over last 2 years specifically, and last year in particular, and SIPs have been a very big driver, So any time markets are used to a particular amount of liquidity, it slows down. It should be, it should have an impact. But I think good part is that it is not reversing, and still mutual fund industry is sitting on a fairly large amount of cash if you just see that. So I think, I would see this more a blip than rather than a trend reversal. And as long as it is not something to do with trend reversal, one should be fine with it, because I think this will come back. I think this reduction you are seeing is also in line with the prevailing market sentiments. We've been seeing 3-4 months of kind of consolidation.
Okay, so this is just a blip and it's not a trend reversal. That's good to hear. Vikas, good morning.
Good
morning.
morning.
You do believe that this market is sort of headed higher in the medium term?
So I think so. We are markets. We are in a very interesting situation. Over the next 6 to 9 months, there are lots of uncertainties at a macro front. I think one is on a political side. Both at the central level, at the state level, few important state elections are coming through. Secondly, I think there are some economic macro uncertainties from a currency perspective, from oil price perspective, and all those things will remain sort of overhang on the markets. Barring that, I think good news is the corporate earnings are picking up, businesses are doing really well, demand is picking up. So I think this pull and push or tug war, you can say, will go on in the market for next 3 to 6 months, and the market will be fairly volatile to the news flow. First round of adjustments have happened. We've seen fairly large froth getting cleared in mid caps and large correction coming through in mid caps. Right now, if you see, markets are in a consolidation zone. Now, and I see market scenario remaining pretty much like this over next 6 to 8 months. If anything were to happen on a negative front, you will see market selling off. Market would be, in my opinion, little bit, reluctant till the time we see clarity, in going up, or participant would be kind of a bit conservative in putting in money for uptick. But I do believe that this will be one of the best time to invest, because economy is on mend, economy is on repair, corporate profits are doing well. So as and when this clarity, comes about at the macro level, you will start seeing over the next couple of years would look very good.
Okay, well, I want to put another factor on the table, if you please. First of all, in your opinion, is the downgrade cycle over? Because for the longest time, we are expecting this V-shaped recovery in earnings. This time it should come because the base is pathetic. So there should be exaggerated, 17-18% rise perhaps. But is the earnings downgrade season over? One. And two, separately, even with this fall from 11,000, it's not a big fall, the markets are expensive. As Nandurkar of CLSA was telling us, on Friday, it's still 19 times. So, would you worry?
So absolutely, I think, I don't think the earning cycles would go down further here. Definitely, I am a fairly big believer in, recovery from here on. In fact, at all, you might see a bit of upgrades coming through. Okay. I think, this part of the year, this year you still might see corporate banks being a bit of a dampener at overall earnings level. But if you see some of the segments, if you take corporate banks out, probably you will go upwards of 20-25%. And that is a very good situation. So I think, broad basing is happening. Of course, we all know what's happening in the corporate facing banks, and that's, in my opinion, this year should be one of the, worst year in terms of, in the sense, this year should bottom out from a provisioning perspective. You would not see many more surprises coming through from here. This year would be a clean out year in that sense. So I think earnings side, I'm not as much as worried. Coming to a question on valuation, valuation is a function of two things. One is earnings growth, and secondly also your cost of capital. And we are seeing cost of capital sort of going up. Now we'll have to wait and watch how far it will go up, and it all depends on the inflation number, oil price, and all. It's a moving sort of situation, so you can't really make a comment. But I would not worry even if at 18, 19 times earning, if the earnings growth sustains. Then I think probably one can overlook. I don't think there's a case that we are seeing 200 basis point of interest rate rise, but definitely interest rates are going up. Cost of capital is going up. A bit of risk premium towards emerging market is going up. So if I put together all those factors, then I think valuations also comes as a little bit of a challenge. So that's the reason I believe that 6 to 9 months, you may not see a great, breakout kind of market. Yes, it will not be, in my opinion, it will not be very bad also. I mean, you are not seeing a sell-off and, that India story is over and all. So there is a pull and push happening, and we'll have to live through this volatility and consolidation phase, whatever you call, over next 6 to 9 months.
This market is in a mood to sort of punish even remotely negative news. I mean, cases in point, companies like, say, Shriram Transport last week, Dilip Buildcon, fundamentally strong, but shrouded in some controversy, and company has come out and allayed those concerns. As an investor, what do? Do you buy into these names? Do you stay away?
See, I think right now market is in such a fragile situation that, markets don't like right now any negative surprises, because anyway it's a fragile kind of situation from a sentiment point of view. And any negative sort of news specifically on corporate governance and quality front, markets are very, very sensitive to. And we have seen whenever the auditor changes have happened. And this is also in the backdrop of some of the large scale issues which have come about. Some of the large scale falls have happened in the share price, and investors have lost lots of money on that. And when you have that kind of market backdrop, it is genuine that markets would kind of, whenever first sign of such thing happens, market will, or participant might hypothesize.
But these are generally great buying opportunities in hindsight,
absolutely.
right?
So if your conviction around the quality of the management is there, it becomes a great opportunity. So I think it really depends on the company case to case basis you have to make. You cannot just say that stock price has fallen based on the news and hence let's go and buy. It's case to case, company specific, issue specific. How serious the issue is. Is market really short term punishing, or it is just really is it really a big issue? So all those things have to be looked into.
So where is your valuation comfort? Is it with only the big boys at this point in time? The mid cap pain is not over?
I would not say, Lata. I think, of course, large cap quality stocks are very good and valuation also is reasonably placed. But I would say even mid caps, there are stocks which have corrected 40-50%.
Like I was saying about.
And even without any issue, by the way, they have just got corrected. I rightfully so, because the overall markets have corrected. But there, you are seeing good business quality or sustainable growth can happen. So I would not say that mid caps are not good risk reward right now. One has to obviously do the work and study. But I'm quite confident that mid caps, you will see many promising ideas, many promising sectors, sub-segments where you will continue to do well. And you look for those kind of corrective moments.
Specifically on the IT space, I mean, because it's a big week for IT earnings. Tomorrow there's TCS, Friday you have Infosys. Are you still bullish on this space?
Absolutely. I think after,
You guys came out with that report, right?
We've been bullish on IT
for a decade or something like that.
So we've been bullish on IT for last over 1.5 years specifically, and we saw this tide changing, in favor of the volume growth beginning to come, and I think only rupee depreciation has added to the situation. So we do believe that over next, after a long period of volume degrowth or volume consolidation, now we are beginning to see volume growth and new order wins. Developed markets are delivering growth. I think in this kind of situation, you will see IT companies doing well, and valuations are not very demanding, good balance sheets. So we are quite positive that it will continue, and also it acts as a hedge in your portfolio.
Absolutely.
So most of the investors would want to own it.
Yeah, Vikas, let me wind back to the start of the conversation when you spoke that corporate banks will still have this will be their worst year. They have yet to trough out in terms of bad news. Expand your analysis to the financial sector, the non-banks, the space which you all know intimately. There will be a problem of higher cost of money. It will hit NBFCs more easily, more dramatically, because they are borrowers of wholesale finance. So how do you sift? Which is the NBFC that will tide over? Which is the NBFC you will avoid? Like, would you avoid housing finance? Which ones will worry you?
No, I'm not a big, believer in this hypothesis that NBFC will be a big hit because of this, provisioning. What I was meaning to say was
cost
that
of money.
Cost of money is going up in general for everybody, and I don't think, that is specifically to NBFC as a segment. In fact, NBFC as a segment is also consumer of capital, which most of the banks are planning to deploy. I mean, there's no other demand of the capital. So I do believe that NBFCs rather, most of the NBFC, should be able to pass on this cost of capital to the consumer. In most of the housing finance cases, if you are, most of the HFCs have taken hikes, 2 to 3 hikes in last 3 to 6 months. So I don't think if there are NBFCs which are not able to pass on their price hikes to the
So you don't have
consumer,
a worry with the NBFC space generally?
In general, I would not have worry. I'm sure there will be pockets where, there will be organization pockets where there would be worry, but in general, I'm not worried, because there are most NBFCs, especially large NBFCs, are very robust business models, and their pricing is such that either they're able to pass on or absorb whatever minor cost hikes has happened through ALM, through various other instruments you have. So I'm not overly worried on the NBFC segment. In fact, rather I would say financials in this otherwise poor situation offers a very good in this correction opportunity to buy.
Okay, and before we let you go, any more marathons that you're running later this year?
Not this year, but I think maybe I'll do the Bombay one.
Yeah, after the rains there.